So here are the data set. I want to be using the technology data set. For example, here the data set sent to me. So this is my on-screen keyboard, and I have issue with one of my buttons on the keyboard. So now here are the dependencies we installed that we're going to use. So the first thing we're going to do is to try and visualize the data. Let's see how they look like. So now to view the data, we're going to read it using the pandas module. For example, the first one is Apple. Let's call it Apple underscore data frame df. Let's call it equals to pd.read read csv, and we're going to impute the name. And the name here, the name of the Apple data frame is appl.csv. So appl dot csv. So now if you can see, if you run it, it shows correct, shows that the code is right. And now we can view it. Let's just view the head. Let's just view the head and see what it looks like. So Apple data frame dot head. So now this shows the first 5 entries. You can see the first column is here, number, date, open, everything. So the same thing with the second. Let's do Amazon and see. Let's do Amazon. I'll just copy this code and paste. So all we need to do is just change the name here to Amazon data frame, and the name of Amazon data frame is amzn. That's amzn.csv. So now can we also view the head? As you can see, it's just the same. It looks the same as Apple data frame. So now I'm going to pause the video and do the same thing for the remaining 4 data frames, so as not to waste our time. So now you can see I've loaded the Microsoft, the IBM, the Google, the Facebook, we have the Amazon and the Apple. So the next thing is to change the data types. As you can see, here is a datetime format, here is open, high. As far as it's concerned, the code editor will still be treating everything as strings. So we need to let the computer know that this is a datetime format, this is a numerical format, and all. So I'll go ahead now and pause the video, write the code, then I'll pause and explain how I did it. So here's the code for changing data type. As you can see, this is the Apple data frame. I'm taking the date column and I'm saying okay, it's the same thing as Apple data frame, taking the same date, and I'm going to apply. I'm using the word apply pandas to data frame to convert it to date time module. I did the same thing with the date column of Amazon. I did the same thing with the date column of Facebook. I did the same thing with date column of Google. I did the same thing with date column of IBM data, and I did the same thing with date column of Microsoft. So it means the date column of everything is solved now. Now remaining the open hash. So now I started from Apple again. I chose the column open, which is this open, high, the high, the low, ADG close, and volume. And I took this same thing and I apply PD to numeric to change it to numeric data type. So now when I run the code, exactly the code says everything has been changed. So all the date format here has been converted to normal date format that pandas and Python understand, and the open, high, low, close, edges and volume have been connected to numerical values. So after doing this, the next thing I feel we should do is to see how the stock open prices, how does it look like in the visualization. Let's visualize how it look like. Let's do a time series analysis to see how it looks like from 2010 to the present, date of which the data frame is. Let's see how it looks like. Let's see how it increases, how it reduces, and everything. So now I will pause and write the code, then I will pause. So as I've said, here is the code. I use what's it called, matplotlib. Matplotlib is used to I put the figure size to be 30 by 20. So and I plot the date by the open price is open according to this here. So now the date is going to be in the x-axis and the open is going to be in the y-axis, and also label them. I'll give it a title, open stock price for technology stocks. I put the price and everything. So now let's run the code and see. As you can see, I have nothing down here. Let's run the code and see what it looks like. So matplotlib is creating this. As you can see, it's create a nice visualization for us to see how it progresses from 2010. As you can see, the open price of everything from 2010. As you can see from this legend, the opening price of the one in red, that's Google stock. The opening price of the Google stock was actually more at the beginning, but I mean Amazon overtook, and the opening price of Amazon now is like almost double or triple of the Google stock price. So now opening price is not enough to visualize into how stock is behaving normally. I mean normally we are supposed to see the volume, the traded volume, the total traded volume, and the returns of each stock over the years. You understand now? So now I'm going to pause the video and also write the code for visualizing the volume of the traded volume of each stock in this technology and see their progression. Okay, and also this is I want to plot the volume traded. As you can see, all I did is the same thing as the open stock price. As you can see, all I did was just input the open column into the data frame, into the code here, then I just replace it with the volume. It's almost the same thing, and also the labeling too. So now let's run the code and see what comes out of it. You can see the matplotlib is doing its stuff and arranging the legend and everything. As you can see now, this is giving a lot of insight. It's giving a lot of insight, and it's being led by the Apple stock here. As you can see, the Apple stock has some amazing spikes here that we really need to understand the reason, at least for the highest one here. Understand the amount of the volume traded. The volume traded of Amazon stock was actually more than the other ones. So now let's dive deep into the reason for this highest spike here. In fact, let's locate let's check the location of this highest spike here, and from there we can start to check for what actually happened, what actually caused it. So now to get the location, I've written the code of the Apple, the highest volume, the volume of the highest volume, that's this place with this highest spike here. Let's check the location and probably check the date and see what happened there. So when we check the location in this code, you can see the location is at location 24, and it happens on 18th of January 2011. So 18th of January 2011, what might be responsible to this? A simple Google search will have actually helped us answer the question. As I've done earlier, you can see on January 18, 2011, something happened to Google. Something happened to Google. As you can see, Steve Jobs actually left Google, and it pushes the stock down by 2.2%. That's the reason for the fall in that spike. It pushes down to 2.25%. I mean, the network here is somehow slow, so I know I will come back to it and attend to it later and see. So that might actually be responsible for it. As we said, that might actually be the number one reason for that spike up and down. And again, why not we decide to check the opening stock price of within like 2 or 3 days before and after that particular day and see how it behaves. Maybe sometimes it might be due to the opening stock price. It might actually cause increase or reduce in the trading volume. So now I will pause pause the video now and go and write the code. So as I've said, as you can see, here's the code. The location of that this thing is 74, location 24. That's the location for the spike. So I decided to plot a graph showing the open prices within location of 72 to 76, and also the date. So let's see how it looks like, the open prices. So as you can see from here, on that day 18, that there was spike, you can see the open prices was at its minima. You can see the open prices was at minima. So it's only reasonable that people decide to panic sell and sell and sell, because of, I mean, there's news that that Steve Jobs have left, and the opening prices has gone to the minimal within the previous 2 and next 2 days. It's around the minimum, so it's only reasonable that people decide to panic sell. So that might be responsible for the increase in volume. But volume of stock is not enough to actually see what's actually happening to the stock. Is most time to get the total number of traded volume, we need to multiply the opening price by the volume of traded stock, the opening price and the volume traded. So now I'll pause the video now and write the code for that. So basically the code is going to create a new column which might be total traded, which is actually a function of the product of the volume and the opening price of the stock. Thank you. As you can see, I've written the code now. You can see what I did was the same conversion to numeric. I need to make sure that it's converted to numeric. I have to write the code again. Then I created a new column known as in the Apple data frame, known as total traded, and it was a function of open multiplied by volume. I did everything for Apple, Amazon, and everything. So when I run the code, if it brings out exactly, it shows that the new column has been created, and also the data has been converted. In fact, let's just take a look at one of the data frames. For example, Apple. For example, the Apple data frame. Let's see the head now. Let's see the head now and see if a column known as traded volume has been added. Exactly. So when we print it now, you can see here is a new column known as traded volume. Initially it was not here. You can check when we check for Apple here, when we were opening the file, it was not there. This Apple data frame, and we only have volume. But now we've created a new column known as traded volume, which is nothing but the product of open and volume. So now let's visualize it. Let's visualize just that traded volume with time and see its progression. So I'll pause the video now and write the code. So here is the code, just visualization of the traded. We can see traded volumes. So when we run the code down, you see the total traded. When we run the code, you can see the total traded. Something amazing is happening here now. Let's just check it. You can see that it's dominated by just one stock. And what is the stock? Amazon. So initially when we check the traded volume here alone, it looks like it was only Apple that was only doing the magic. It was only Apple that was having the highest trader. But when we consider the entire, I would like to say, income now generated, that is the prices and the traded volume, when we compare, when we add both of them together, you can see that Amazon was generating a whole lot of money, even more than the others. Others are not even coming out. You understand now? So I mean, there are spikes in Amazon too. I mean, this place which has the highest spikes, which is around 2000, and it happens around 2020. We might decide to check what actually happened. What was because of this overly spike that happened here. So let me just pause the video and write the code and check. So now when we check the traded volume, the maximum traded volume actually occurred in ending of July ending of July 2022. So now actually, so if we try to check the opening prices with that time, you can see that basically the opening prices around that time was not really giving enough information as to why the spike occurred. So the next thing is to go on Google and try to check what actually happened. So according to the news here, according to the news, we'll see here that around June, the stock price actually rose. In June, the stock price actually rose by 13%. It is the entire of June, and mostly it actually happened in late June. It rose by 13%. So the reason why it rose, I mean, you can actually check the details. Normal continue to pile up to 20 market value. Share rose by 30% in June, according to so we can actually read to check for reasons why it increased. I mean, this is a good news for for investors. So basically that actually answers the question. So now the next thing is to check for the returns, or let's try to check for correlations between two or more stocks. For example, let's see which of these stock, Amazon, Apple, Facebook, Google, which of them actually behaves alike. I'm going to pause the video now and I'll write the code and play it back. So now, as you can see, we need pandas plotting to actually make a scattered diagram of, if we are trying to check for the relationship between two numbers. Scattered diagram is actually the best option for us. So I need to import this pandas plotting, and then I had to concatenate. I had to concrete the open prices of all the stocks together, then actually give them the columns name. And now let's run the code and see what's happening. So now I'll pause the code now and write out the visualization code. So here's the visualization code, and now we need to do, I applied, I took the tag, the comparison, I put the figure size, and also I'm using histogram, so I need to add the bin and C. So exactly, you can see, look at the comparison. So actually the comparison is calculated with stocks that are on a straight line. So most times it's very hard to see those that are on a straight line, but you can see those that are relatively on a straight line. For example, when you compare Microsoft and Apple, you can see they are almost in a diagonal line like this. So you can see there is a relationship between Microsoft. They're actually a lot more correlated. Unlike this, you can see that Amazon and Microsoft too are somehow correlated. You can see that Microsoft and Google too have some level of correlations. So those that have this linear line along this direction or this direction actually have lots in common in terms of open prices, because we use open prices in this code. So now the next thing is to check I don't know, maybe the next thing should be checking stability and volatility of stock before going to the returns. But I'll pause the video now and I'll pause it when I figure it out. So now the next thing will be to check the changes that occur in stock from day to day. For example, and we decide to create a new data frame for it to call it return. So it's actually calculated by the closing price of a stock on the first day, and all over the closing price of stock in the second day, in the day before, in the previous day, the closing price of a stock today, all over the closing price of stock yesterday. So when we divide it, it's going to give us the daily changes. The changes actually happen consistently of all the stocks. So when we run the code, we can see definitely our calculation is correct because it worked fine. So now let's plot the daily changes and see what happens. Let's plot it and see. So now we decide to plot the daily changes into a histogram and see which one have more variations in day to day. So the more dispersed of the histogram shows that the stock is actually more volatile, because it's going through the extreme, and the one that are compact within the middle or within a zero number actually shows that they are more stable. So now let's run the code and see how it looks like. Beautiful. Now as you can see, we can see that the most dispersed of these stocks is actually this one in green, light green kind of. So now which one is in light green? Facebook actually is more volatile than every other stock. So it shows that Facebook is actually the less stable of the remaining stocks. So now the next thing is just to check the what's called the return, the cumulative return. Like for example, I want to know that if I had invested, let's say $1 in one of the stock in the date that this data set started from, this data set, which was on I think December 2010 January. So how much will I be having presently, or how much increment does it have every day, or how much reduction does it have every day? So we're going to create like a cumulative or return column, which is going to help us calculate the additions and subtraction of the difference in the opening and closing price of each stock every day, starting from day one, starting from number one in day one. So let's say in day one it starts from number one, and in day two the stock increased by 0.2 when the open and close are separated from each other. So now the cumulative return in day two will now be 1.02, just like that, continues like that. So I'll pause the video now and write the code, then I'll pause it. So technically, calculating for cumulative products actually a function of the pandas. As you can see, I created a new columns. It's a function of addition of 1, as I said earlier, plus the return data frame return, the one we got earlier, and we now add cumulative product to it. So now when we run the code, beautiful, it shows that the code is actually correct. Now let's visualize the cumulative returns over the time. Here's the code for visualizing it. So when I run this code, let's see how the cumulative returns they actually happen. As you can see here, everything actually starts from 1. So the addition and subtraction of each daily thing progresses. As you can see, if I actually invested $1 in which stock is yellow, in Amazon will have given me the highest amount of returns at the end of the day, which is somewhere, and Apple will have given me the second highest, and Facebook will have given me less, and the least will actually have been IBM actually is stocks actually not really been impressive over the years. So this is the whole extent of the analysis. So thank you so much.